Hello, everyone. Welcome back to the RationalInvestor.com's Weekend Frivolity, our Broiler Chicken Show. Let's see if broiler chickens are broiling. Back to the Rational Investor. Way to go, YouTube. You did it. All right, welcome back to our weekend show. My name is Brian, the Rational Investor. Working our way through 2020. I bet all of you were kind of, tongue-in-cheek. Oh, that's crazy, Brian. Cycles never end violently. This will be nice and polite. Baby boomers will just hand over the reins, and the millennials will take over, and that'll be that. Not so fast. All the people that have been attended our school program. I have the privilege of working with you over the past 4 or 5 years. I'm sure you probably weren't expecting that rather dramatic shift in our society here as we make our way well into the 21st century. So hang in there, everybody. If it's one thing that I can tell you is there definitely will be better days ahead. Obviously, lots and lots of confusion going on in the world. Ironically enough, for all those crypto enthusiasts, this is my opinion. This is just vindication why you got involved in this space to begin with, and such a affirmation of this idea that the number of units that you issue of your currency will directly value or directly affect the value of your bartering tool. It's kind of funny, Kevin and I do these weekly shows, so I love touching base with him, and he was saying he's listening to people that because they're basically completely disconnected with basic economics, supply and demand. Lots of these sort of modern monetary theory kind of people running around, and just basically saying universal incomes for everybody will get rich, blah blah blah. Unfortunately, I don't think that's a path of setting yourself up for success. What I have often seen in my career is around sort of crisis situations. The powers that be, just to sort of keep the system going, or will do whatever they have to do to keep the wheels on the bus. And then when the dust settles down, there's almost always a sort of a day of reckoning well after the fact. Could we hear about news through 2021 and 2021, 2022, maybe even into 2023 of all this sort of resolution of all the various different bankruptcies that are going to have to develop through all of this? Absolutely, without a shadow of a doubt. And it's interesting, too, how, we have gotten used to this sort of globalization kind of theme here over the past 20, 30 years following the collapse of the Soviet Union. And, we might actually have a period where that pendulum swings back and you actually get almost like a period of isolationism. And a nice little sickness here sure helps that cause out, eh? Especially what I'm hearing is, the virus mutated, now it's a different strain, so you're all screwed if you got a vaccine. Well, too bad. It's exactly the same as if it was square one. I mean, I don't know. Who knows all that shit? If anything, I would just say it's probably par for the course for this environment that we're in. Also, too, I don't know whether it's nostalgia or not, but I'm just watching one by one all the various institutions of the sort of 20th century that I grew up in just being dismantled. So I have no idea what our society is going to look like here on the other side of this. It should be a fun time, that's for sure. And I thought it was kind of amusing. If you think about it this way, here's kind of a funny mind bender for you. If Bitcoin is technically a CIA pet project, then couldn't, and if that's the case, then obviously some of these original wallets that we all love to watch, do they move? My hunch is a few of these sort of insider CIA kind of people are the ones who are controlling these wallets. And could they, by definition, if you bid Bitcoin price up so high, could they come out, since they are technically part of the U.S. government, and just simply hand those wallets over to the U.S. government, and boom, your national debt problem is solved? We just conveniently use the Bitcoin wallets as collateral instead of actual physical assets. So, and I always love to sit and sort of, dream up crazy sort of conspiracy theories and what's the future going to hold. And I don't think anybody could imagine that kind of scenario. But, anybody who's like involved in Russia or, China or anywhere around the world, I think you should understand that there is a fairly, entrenched belief system that Bitcoin and this cryptocurrency project is really just all a CIA pet project. But no, we don't want to open up that Pandora's box today. Today, being Sunday, and thank heavens we're finally through October. They always say October is the worst month. September, historically, statistically, is the worst month in the stock market. October is usually a pretty doozy, and sometimes you get really bad crashes in October. So thank heavens, we're beyond that. So here we are, November 1st. Of course, you've heard Brian squawking all year long. We have a big Jupiter-Pluto Saturn conjunct event coming up here. It's somewhere here in the first or second week of November. I can't remember just off the top of my head. And I think that actually goes through, really nicely with how we saw the last health crises develop. You remember back in March, April, basically, the health crisis exploded. The market tanked. They all came in. And I suppose I can pull up a chart here while I'm blabbing away. Where is my stock market stuff? It's all over here. Stock market-y. Look at that chart, eh? If you happen to be in Mirati Therapeutics, I noticed insiders are dumping stock heavy, so maybe take some profits. Where were we? Oh, level 2ers having fun with WD Gann right now, so man, we're hip deep in Gann's world. Let's see. What did I want to? Oh yeah. Do I have it on here? Well, simple enough. I had some really cool charts of all these drawn up, but I put them away and I can't find them. Anyway, so big dump ahead of the, this was the spring Jupiter Earth Saturn event. Then there was one in the summer. So again, big dump ahead of that event. And then ironically enough, the actual event is sort of like, okay, that's the end. And then coming out the other side. Phew. So here we are. Next big one coming up here on the 13th. Seems logical to me, the dump in the market ahead of that event. I wouldn't be surprised if you find out later on that the Fed and the powers that be, they'll say, well, we don't want anything to go wrong through the election. They actually find out that they're coming in, they're going to support the market in here. That wouldn't surprise me. So, but hopefully what you kind of see here is, a dump ahead of the event, then sort of a springboard following, dump ahead of the event, springboard following. Believe it or not, that doesn't surprise me. See something like that. In this crazy fugazi world, I think, had the market acted in a very sort of fractal pattern, we would have cascaded lower. I wouldn't be surprised if you find out that this counter-trend rally was encouraged along just to make sure we wouldn't do this. Who knows? Tinfoil hats, whatever. Cycle-wise, boom, cycle low, cycle low. I like the idea that there's some sort of pivot in here. Also, too, if we think about what sort of happened through this dump, remember that because the election is on Tuesday and the stock market has 3-day settlement, so that means if you actually wanted to do a stock transaction and have it settled before the actual election event date, which I'm sure a lot of funds and stuff, they want to make sure that they have positions on and they're settled before so that they can print on their statements. We were long from October 31st or from November 1st or short, whatever. 3-day settlement there would be, have to have it settled by, say, Monday. So 1, 2, 3. So I think you got most of the business that was actually needed to be done in the stock market was done on the 29th. And they'll settle up on Monday. And interestingly enough, yesterday, I got the impression, especially when we were looking at options, open interest information, level 3ers are working away on that. Felt like yesterday was, yesterday being Friday, was sort of like a head fake push. Let's see if we can get retail to really panic and puke out here. But ironically enough, through the whole day, and this is what I sort of reported on the site, if you actually look at the price action through the day, and this is classic Friday options expiry, you can see they tried to dump it at the beginning of the day. And even through the end of the day, you can see they just kept pressing these lows, pressing. And the market just wouldn't take. And in the last 5 minutes, just a massive short covering rally. Not so much in NASDAQ, but S&P and Dow. And just rip all their stops. And just, any weak hands that were trying to short and push the market down through the day, they just got punched in the nose right at the end of the day. And that doesn't surprise me. Right now, if anything, and especially tomorrow, Monday, the day before the event, I would imagine most serious bets are already placed. And let's call a spade a spade. I couldn't give a shit. You all know, anybody watching on YouTube or on the site, you know exactly what I think about every single politician that's ever been alive and that will ever be alive. So it's not like either one of them are any different. But let's just sort of call a spade a spade. I think the market pretty much has decided who's pretty much going to win here. I think the question ultimately for me is who controls the Senate on the other side of this event. And I think you can see that the U.S. senators themselves, they're concerned about this. This is definitely, and in my opinion, this is where it gets a little scary for capitalists. Is that if the Republicans lose control of the Senate, then it's going to be a one-directional government. One-directional governments are not usually very good for markets. If the socialists come out and pass a whole bunch of new taxes and, shit on social media and stuff like that, probably shit on crypto. That lady that is in charge of the House, I think it's one of the budget committees, Maxine Waters. She's not very crypto friendly. So just be aware of that. And what I'm worried about is, a lot of people in the market, they just they assume pie in the sky. But look at that image, people. Is the market trying to maybe talk to us a little bit here? Just maybe? You all know what happens if this market goes and starts smiling at us. So, just be aware of the realities. And if anything, this is like, GOP loses the Senate. And no, GOP doesn't lose the Senate. That's what I think this is like. But to be perfectly honest with you, that's what I think's going on here. Well, there you go. Fausti's got a nice little comment about Wall Street people. Actually, it's kind of funny, Faust, just for whatever it's worth. Most of the level 3s actually made the connection this Saturday, and it was really cool to see it happen. What you don't realize when you come to TRI is that I want to turn you into the exact people you absolutely hate. So, I'm trying to teach you all how to think like bankers, how to think like institutional players. So I'm sorry in advance. But ironically, my goal is to turn you into one of those people that you really don't like. Now, what you do with those powers, once you have them, Fausti, that's up to you. You can always use these powers for good in this world. Right? So anyway. Okay, so stock markets, basically you can see the market's on the edge. And I don't know, man, call me crazy. Maybe Mr. Trump pulls one out. I think you probably have a pretty good vote as to what the fate of our economy is with the resolution of that trading range. It's pretty straightforward. My hunch, for whatever it's worth, is, ironically enough, I think we're probably going to get that kind of reaction. So I wouldn't be surprised if there's some sort of emotional reaction out of the event. They might even try and wash the lows and get some people to really panic. And then probably a counter-trend rally into end of year probably starts doing things like reload zones and all that kind of stuff. But make no mistake, I would imagine a lot of institutional players are watching, as the big U.S. stock market proxy. They're probably watching this range here and just simply saying, there's a line in the sand. It's very simple. If we're up through the top here, economy's growing, capitalism 101, rock and roll. If we're down through the bottom, you might even call this like the COVID range. And if we lose these levels, then this becomes a pretty darn big brick wall of resistance. And then, this will be your COVID top up here. We'll call that the COVID top. And I suppose this is where the politicians, remember that one Republican, shouldn't we talk about bailouts? Shut up! Right? So we'll call that the COVID bottom down in that range down in there. And the interesting thing is I guess we'll put a B. There we go. So COVID top, COVID bottom. The interesting thing about this is, ironically enough, this actually makes a very, very negative chart pattern. Really bad pattern. I guess the question ultimately is, where do you start the drawing from? But usually it's like 3 tags of the top end of a trend line. So like 1, 2, 3 into that event there. So if that's the case, then we want to go like 1, 2. And we want to look for some sort of third tag. I don't know whether we want to go all the way back there. If we go all the way back from that beginning point, then actually that paint's down there. And actually I kind of like that because, like they always say, V bottoms. This is a classic V bottom. V bottom. Julian, of course, pissed off. Where the hell's my goddamn polite W that's going to give me my long-term secular turn? These V bottoms, notorious for being tested. So, ironically enough, that would actually be poetic, right? I don't know where the hell this thing goes, but, maybe we can finally do something like that, right? And actually put in a solid base here. So, the message is there. If anything, I kind of, the way that they sort of ramp the market straight up off of the March lows, this is this sort of funny free money world. I do find it amusing that, the modern monetary theory people, everybody should get like a universal basic income stuff. They're all having the rage right now. But let me ask you this question. Do you think that the bankers are going to give you a free ride in this world? I mean, let's be perfectly blunt. I think the bankers are saying, hey, the masses are kind of struggling here. We're not quite sure what's going on, so we'll play it cool. We're not going to be dicks right now. But there will be a day of reckoning. It's so funny as I was reading articles about the Canadian real estate market. I mean, it is absolutely lunacy what's going on here. But the sad thing is, the guy who's running the bus in Canada right now, he is not an economics major. And he appointed his BFF as the finance minister for Canada. And she's like the deputy prime minister now. Like, what the hell's going on? This is crazy. But, they just, ironically enough, Canadians got massive bailouts. They even said in here that the government program that they did back in the spring there actually paid people more money than if they had actually had jobs. Yes, overall, Canadian households received more money, $56 billion, from the government aid programs and other transfers in the second quarter than they lost in wages and salaries due to the pandemic. Look at that, almost more than a 2-to-1. I mean, what the hell's going on in this world? Is this sustainable? I mean, come on. The rubber will hit the road at some point. This has got disaster written all over it. The only problem with economics, right? Good old Adam Smith. The market will remain illogical far longer than anyone can remain solvent. So you try and figure this out and try and predict the future, and you end up going bankrupt. Trade your setups, play from a position of strength. Hey, Bagra! Bagra! Hey, Bagra! I haven't seen you in forever. Hope life's treating you well, Bagra. Kevin says you keep working away on your little algo over there, so you don't know. Bagra was around before you were around here, Khalid, so you missed it. You never went around for those kind of days. Oh, Bagra! Okay, so, there's your big picture, right? Heading into the election. What do we say if we ever see the market smiling at you? It hasn't officially smiled yet. It's sort of like going, do I smile? Do I smile? Yeah, I don't know. And I got a funny feeling probably if Mr. Trump wins, it'll be like a head fake, zing, zing. And then we keep heading higher. If Mr. Biden wins, I think it's also going to be a head fake, zing, zing. But I'm just predicting the future, who knows what. But my hunch is the market stalls on counter trend rallies back up against the highs if Mr. Biden wins. But we'll see. Right now, big fat range. Good part about this, and actually this is fascinating, because I think actually this is an opportunity where Bitcoin really starts to show its sort of, I'm not part of the system anymore. So in a weird sort of way, this is kind of good. Especially for all you, crypto enthusiasts and Bitcoin, fiat currency, fuck you kind of stuff. Not supposed to swear. Actually, I listened to Chico's podcast. I don't understand why people are so bitchy about that guy. Seems like a really down to earth guy to me, but who knows? So Faust has officially declared that Biden is not going to win, so we can all relax and don't worry about it. Faust, they always say, don't put your neck in the noose. I have no fucking clue who's gonna win, and I wouldn't suggest you do that. Look at Hillary last time, eh? I mean, I don't think it's in anybody's best interest to declare Trump is going to win. Trump isn't going to win. We just got to see what the hell happens here. Anyway, back to the conversation at hand. I do find it. I mean, you level oneers, you went through the fear, greed, asset, proxy cycle conversation. Not quite sure why I put that away. And that's sort of this stuff, right? So how does gold, and I think with Bitcoin attached, how does this act through these cycle pivots? This is paper assets measured versus paper assets versus hard assets, beg your pardon. So back pre sort of crypto world, gold, no Bitcoin. Gold was sort of the only sort of hard asset proxy to get out of fiat. So it bottomed relative to paper assets back in 1980, topped in 2000. This is a very normal generational cycles. So with the inclusion of this thing called Bitcoin and digital gold now, how is this curve going to look? It's interesting, there is the 2011 sort of, there's 2008 financial crisis, the ultimate bottom. If this was normal, this bottom should have happened in this window, but this crazy thing came along and gobbled up a lot of the purchasing power that gold used to enjoy. So the question ultimately for a guy like me is, how does this ratio ultimately turn? my sort of theses was that end of 2017, beginning of 2018 was the pivot. So I do find it fascinating, and really that 20,000 Bitcoin was sort of its sort of pivot top. So really the question ultimately, if this thesis is still sort of somewhat usable, my hunch is Bitcoin can't get through that 20,000 top right away. But we'll see. I mean, you can see she's definitely pointed that way. And if stocks break here and Bitcoin continues to work higher like this image sort of suggests, well, we should really take a serious stab at that high through this, whatever the hell this Jupiter-Saturn event is. And keep in mind, this Jupiter-Saturn event, this happens about once every 20 years. So is there a coincidence with these, generational cycles and the Jupiter-Saturn event? I think so. I don't know how tight it is. I suppose you could argue the Jupiter-Saturn event injects a whole bunch of anxiety into the humans, whether it be, there was one that happened through World War II. Coming out the other side, of course, everybody's all feeling better, and they go off and reproduce, and you get the baby boomer generation, and people say that that's what caused that demographic cycle. So, is it like the chicken and the egg? Is it which came first? But what I would say is we are definitely going through a massive anxiety pivot right now, no doubt about it. And as I kind of started off the video today, I think there'll be better days ahead. If anything, we were kind of fearing and dreading, and most of the people that took my courses and stuff years ago were just like, "Oh, Brian, he's crazy, mad scientist." But myself, maybe some of my disciples now, we've been dreading and fearing this event. Oh God, here it comes, here it comes, here it comes. If anything, this is great because get through this goddamn event, and we don't have another one for another 40 years. Probably, hopefully, I'll be dead by then. Next time one of these comes around. So, we just got to get through it, folks. It's going to be a slog. I don't think it's in our best interest to try and predict what the socialists could do here. Just understand the backdrop. And if anything, backdrop, that's what this is. What's reality in this world? There's the numbers that are printed in the newspaper. And then there is the, economics 101 sort of, eggheads. People who actually like crunching numbers and trying to figure out what the actual value of something is. The irony of it all of this, guys, is that you could make the argument that our lives have not really materially changed. This is even the prior to the U.S. financial asset crisis, right? The 2008 top in the U.S. housing market, blah, blah, blah. Our lives haven't really materially changed a heck of a lot, even since the Obama crisis days. We've basically been living the same life. Not really much has changed. It's fascinating to see the effect of money printing, and this is this fugazi nonsense world that we live in right now where this isn't real. Like Canadian housing markets going up day after day after day. It doesn't make any sense. Why? Well, it's why? Because the government is just subsidizing everybody's wages. Well, doesn't the government get its revenue from taxes? Oh, yeah. So then that means that by definition, if taxes are less than 100% GDP, there's no way they can possibly match the payouts that they're making in revenues collected. Yeah, so what does that mean? Well, it means we're diluting the currency to keep the whole system going. But shh, don't tell anybody. Shh, keep it quiet. So, that's the world we live in. If anything, I might even argue that seeing this kind of megaphone pattern and finally seeing the top come in, remember market smiling at you, maybe this is kind of like finally the market saying, okay, look, enough is enough. Enough is enough. We've had enough of this fugazi. At some point there will be a day of reckoning and we have to clean all this up. So just be aware of that. Do you find it interesting if we just do a little harmonic A, B, C, D just off of this range, project that down off of these highs, and really all it's saying is we just have to basically go right back down to those 2008 financial crisis lows in real dollar terms. The only problem is they're just going to keep printing. And ironically enough, I don't even know what this is going to look like when we get down to there. But ultimately, I think that's where we got to go. And Mr. Happy-Go-Lucky Cheery Party. Thanks, Brian. I love it when you can do up these videos and you got big fat W staring you in the face and you're like, this is easy sailing. When you get these big fat M's staring you in the face off of megaphone patterns, you gotta go, oh boy, careful everybody. This could be a bit of a slog. For whatever it's worth, I'm a super US dollar bull now. Go back and look at 1980 pivot in the US dollar. I don't know what we do through here. I think, there's probably still some more range left in this. Probably a bit of back and forth. But I thought this was fascinating. Remember that kind of talk I said there just a moment ago about 2017, 2018 as my cycle peak? I did find it fascinating that even when we zoom out on a chart like this is my cycle pivot here. So ironically enough, even with Bitcoin where it is now, remember, Bitcoin topped at 20 G's through this. Ironically enough, even now, you can make the argument that the US dollar index is actually higher than its cycle pivot point, which I find fascinating. Is that a function of Bitcoin's value? I don't know. It's a tough one. But point here is, you can see reload zones. It's a cute little foggy level down here. So I wonder whether we got maybe in one more little fuck you just to piss everybody off and then zip up. But I am on balance very US dollar bullish here, which is stunningly opposite of what everybody in the marketplace is saying. I suppose that makes sense. Kavarkanator was telling me some other day, the other day he was hearing somebody talk about how we're just entering into a new commodity bull cycle. And I was like, oh, God, you got to be kidding me. So, it is what it is. Place your bets. If you don't listen to Brian, don't like my newsletter, I'm not telling you to buy my newsletter. This is the way I think. And it's what I'm preparing for going forward. And if anything, guys, doesn't it make sense? The next 10, 15 years. Seems logical to me. We're just going to spend the next fucking 10, 15 years just cleaning up all this COVID nonsense. I don't know whether you're aware. I thought this was hilarious. What a great analogy of the world we live in. Everybody in Europe's all worried about negative interest rates and they got a lawyer who's running the banking cartel there. Like, give me a break. And so what's everybody focused in on? They're focused in on how the central bankers, and keep in mind, central bankers are slow. They always act behind the curve, right? Their job is to react to sort of remember that labor cost is 2/3 the cost of business. So when labor starts clamoring for more money, and they always come in for more money at the end of the cycle, right? Cost push, demand pull, you know how that goes. So central bankers are reactionary by nature. It's just what they do. So I find it amusing, of course, that everybody's listening to central bankers in Europe, and all they're talking about is negative interest rates, and we're going to charge you money for keeping your money at the bank. What the fuck? Have you ever... do we have any Americans, Europeans in the audience? Are you going to keep your money in Europe if the bankers say, well, you keep your money here, and we're going to charge you an added fee? That's incentivizing you to get your money the fuck out of there. It makes sense to me. So that's just pure economics 101, but we're living in this screwy, fuckazy world right now where it's sort of like, people just use common sense, but common sense isn't working right now. It just doesn't. So my hunch is over time, common sense kicks back in, and then we go all that kind of stuff again. So... where am I going with all this? I thought it was fascinating that the consensus is, from what I understand, that it doesn't matter who's going to win this election. there is a big shitload of U.S. stimulus coming down the pike. And if anything, I kind of like this thinking, because keep in mind there is a lot of international debt that's denominated in U.S. dollars that must be paid back. Remember, those bankers, they're going to foreclose on your country if you don't pay those bills. They will. I mean, that's like China's preferred foreign policy tactic. So, I mean, I don't know how my hunch is the Americans are probably going to spin it, like, especially, well, they'll probably, in my hunch is, they'll probably spin it like, hey, we're here to help you, and, you know, we'll refinance, and it's not that big of a deal. But you know, when that debt has to be paid back, they better have U.S. dollars to pay that debt and pay the interest and all that kind of fun stuff. So anyway, a bit of a rhetoric there. I'm sorry, everybody. Please understand, coming into the end of these cycles, that it's very difficult for me to every single day I do these daily videos and stuff say, hey, here's a new trade idea, or here's that trade idea, when I really actually think that it's kind of like it's not in your best interest to take too big of bets ahead of this big fundamental event. So for the past week or two, I've been sort of, you know, talking bigger pie in the sky kind of concepts and stuff. And, you know, some of the messages I've been sending out on social media, I don't really want to get too wrapped up in the short-term price action here, because I believe that we're going through, you know, especially with something like Bitcoin, we're going through some sort of blow off top here. I put a tweet out. Actually, I really like this. Somebody had replied to this tweet saying, you know, this is a good sort of educational piece, and that's what I think is probably the best way to look at market commentary right now is, how can I learn from these big cycle events? Because right now, I believe that a lot of classic supply and demand, balance sheet, you know, revenue versus expenses, a lot of the classic economic models that we base our decisions on, of course, are absolute, you know, up in the air right now. Absolute confusion. If anything, in those kind of times, you're best just to stay in cash, and it's ironic because cash is absolutely hated right now. I do find it interesting that the powers that be always want to have you invested. You got to own something, you know, and, you know, in a weird sort of way, I'm also hearing the message that, hey, you got to be invested in the stock market. You got to be invested. You got to own a house. You got to be long. And, you know, what you saw there in March is people just go into shell shock, just like in a week or two, boom, all the prices just completely collapse. And then, of course, the capitalists start the whole fucking game over again, which is really interesting, too, because, like, through these dumps, right, what's fascinating is the talking heads, and even government people for that matter, because it just goes to show how slow and wrong government people are. Through this period, everybody on the media and stuff was saying we're all going to hell in a handbasket. That's not a bad little contrarian tool that you can write down and just say, when I turn on the TV and everybody on the TV says we are going down and the economy is going to collapse, I should probably go in and buy. I tell you, it works. It works remarkably. You know, there's one guy, or you could just follow that Crypto Cobain guy on Twitter, because he's perfect. I got to tell you, the guy's he's really, really good at his craft. But in essence, you know, on Bitcoin, he just came in here and everybody was saying down, and he's like, down, fuck you, I'll step in front of that down, that bearish, that end of the world talk. I'm going to draw a line in the sand. And I got to hand it to him, man. That was, I mean, it balls o' steel. And, I mean, now, everybody, of course, clamoring, and especially in public, oh, look how Bitcoin is so awesome. And, of course, now it's almost the exact opposite. I would imagine Mr. Cobain's probably even selling some of his Bitcoins that he acquired down below. I don't know. It's impossible to say. You know, I try to tell you, people on the site, you know, the concepts that we teach in this school are universal. it's not really like anybody's gonna reinvent a reload zone, a 78.6 fib or something like that. I mean, it's universal. It's not Brian's information. It's just the universe's. The question at the end of the day, of course, is how do you take information that all these sort of talking heads on Twitter and social media and Facebook or whatever bark out at you and actually apply it to make money from trading? And, I have to say, one gentleman that I work with, I think he got the message, and I think he basically has this skill for the rest of his life. And I even heard him in a meeting here recently. It wasn't so much like you have to get to the point where when you look at a price chart and you look at levels, you have to get to the point where you go, oh, God, I'd be an idiot if I didn't take this trade. And I have no idea how long it's going to take for you to get to that point. No idea. And frankly speaking, you can't really say that it will take exactly 1 month, 2 days, 3 hours, 15 minutes. You can't do that. It's impossible. You're just going to get there when you get there. But, it's my privilege. It's my honor. It's the whole reason for my being since March 18th, 2011 was to come on to sites like this. And in the morning, I hear people that I work with that just listened to me and said, Brian, I had no choice. I had to step in and buy here. It was in my plan. It's everything that I do with you. It's against a W. It was an 88.6, which just so happens to be a level that I really, really like. And of course, the sentiment in this space was horrific. I can't do that trade for you. I can show you all these pretty pictures, but you actually have to get to the point where you're like, I've seen this happen so many times. If I don't take this trade, I'm going to be so pissed off at myself. So, it's my privilege. If I can help you get to that point, awesome. I've done my job. But at the same time, too, I can't do the trade for you, So, anyway, point here is I think, the people that were very good at their craft of trading stepped in here, and they're getting rewarded now. It's hard work buying against lows. It's hard work stepping in when everybody around you says the sky's falling. There was a cute little tell in here. If you ever hear that governments basically guarantee floors in markets, that's a pretty good buy signal. So maybe write that down. Next time you hear the government comes in and just passes trillions of dollars of funded debt that will basically support the Federal Reserve lending against that collateral to the tune of probably about 10x, whatever that funding number is. That's the definition of a floor. And the cool part about it is, if you are a crypto enthusiast and what does the future look like, where did the money first flow into the market? The Fed goes and guarantees the market, says, okay, everybody, the floor is in. Where did the speculators come in? And I'll tell you, man, the speculators came in. They actually came in on stocks much farther, they came in on Bitcoin much harder and much faster than they did on stock market. So it definitely has to put a smile on your guys' faces. Where the hell are we? I'm trying to show you this. It's too big a picture. Are you going to work for me? There we go. So, what color? I think orange is our Bitcoin here. Yeah. So you can see, Bitcoin, it actually bottomed first. Right, so there's stocks. Stocks didn't bottom till here. Oil didn't bottom till way over here. But Bitcoin, there's Bitcoin. First thing that took off out of the gate was Bitcoin. So I've often said that I think Bitcoin's actually a pretty good leading indicator right now. And if anything, like I said, I'm a little surprised. The oil collapsing. It kind of pisses you off because I wanted to, even on the weekly little shows, I wanted to walk through how to get in on the short side and ride this back down to the 50% roll, and I completely fucked this trade up right here at the end, right at the very end. Followed it all the way along here, and then just fucked the trade up right at the very end. But bang! Anyway, point here is crude is actually doing exactly what I thought, and I don't even like crude oil. Crude oil is 20th century story. So, and then also too, if you think about it, uh, politically, does it make sense? Mr. Trump is kind of supporting the oil industry a little bit to a certain degree. Mr. Biden has explicitly said that he's going to be removing subsidies for the fracking industry. That's going to kick the shit out of the oil market. I actually think that to a certain degree, oil is actually overpriced, even still at $37. So, but anyway, it does make sense to me. Kind of thinking, like I said there a moment ago, if you're thinking that Biden's going to win this contest, then you probably don't want to be too much of an oil bull. And all the rats just scurrying out and fleeing as fast as they can before the event. Now you might find this sets up pretty nicely. Actually, a nice little buying window down here, maybe a nice little surprise. Turns out the Senate held on to Congress, or the GOP held on to the Senate, and as a result, there really won't be any great changes to U.S. policy. Whatever. Anyway, this kind of surprised me to see the noticeable disconnect between crude oil and the stock market and Bitcoin here. Maybe a little bit of a tell about us transitioning into the growth cycle. Because ironically enough, we haven't been in a growth cycle for 20 years. And consistently through the growth cycle, and everything flips over in the growth cycle, which is just going to fuck with your heads completely. But in the growth cycle, you have a strong US dollar index. And the strong US dollar index is actually bullish. You have weak commodity prices, which helps things like growth proxies. So things like the NASDAQ and tech stocks do really well when energy prices are consistently falling. But you guys, I would imagine there's not very many of you who have even been around, let alone trading in a growth market. So, ironically enough, one of the tells of the growth market is the oil is consistently trending lower. It's one of the reasons why the economy can grow, because energy costs, which are a huge component in doing business, keep falling. So the improved profit margins let companies reinvest more in technology, which improves efficiencies even more, which drives stock prices, which drives, lending against the margin of the stock, etc., and the growing of the economy, blah, 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 blah. So, ironically enough, if you're a growth fan, if you like, crypto, Bitcoin 2.0, going on to the next century, you want energy prices to collapse here. Free energy for everybody. And so here's Faust. His comment in the lounge is, buy oil. I don't know about that. But anyway, I can absolutely tell you, if I was an oil bull and I wanted to be a buyer, just be patient. All right, 32 to 36. 32 to 35 is your reload zone. We got a Foggy sitting here at 35. We got 1.618 at 35. And 200% range extension off the top's 33. So any way you slice it here, this is a horrible place to be a buyer. And then also, too, look at these cheeky gaps all right down here in the reload zone. So, I wouldn't want to be a buyer there anyway. So, anyway, that's here another. Okay. So we talked a little big picture. Unfortunately, of course, some big moving parts here. Tuesday's probably going to be one hell of a wild day. So, is there anything maybe we're going to play into that event? Bitcoin. I do find it interesting, these two images side by side. Bitcoin, daily chart, and the poop coins. This is the shitcoin index perp futures. I mean, you'd almost argue that they look almost night and day. So, I guess the interesting thing about this is we have one site member, Colin, who's very active on a site called Hero. And he's been coming on the site and giving us a nice little update of his dominance report. I really like how he did this. It's kind of cute. So if you have a dominance that's Wing out here, you're probably best just to cool your jets and wait for that event to play itself out here. Usually coming out of the summer, that's actually a very perfect time for the alts to sort of poop their bed and crap out. And so I think that's basically what we're going through right now. We got a little chaos level just above us up top here, top of a channel here. I suppose we could probably even do a nice little up channel here. Something like that. So my hunch is probably coming into some sort of apex event. And, actually, that's actually not unrealistic. Something along those lines. I mean, maybe you use that crazy pivot, I don't know. Anyway, point of the matter here is I like some sort of apex move through the election event window. So, I think that basically jives with what we're thinking. The only thing I've sort of said to this is I don't think it's in your best interest to try and sort of pick, a top or a bottom here. Probably best to wait and let this thing roll over and roll out the way that it likes to usually do at the end of these moves. It might take a month or two for this to eventually roll over. Don't think there's a big hurry. If anything, we've been sort of talking, when's this Ethereum 2.0 coming? When's the mainnet launching? Remember back in the summer there, I was all like, oh, it's a big launch, it's a big launch. And it turns out it was just a test net, nonsense. Brian get all excited for no reason. So, my hunch is that the path of this topping out follows along that path of whatever that rollout of that next Ethereum story is. So that's sort of how I'm looking at it. And I'm looking at Bitcoin right now. If anything, I like the fact that this is actually happening. If the whole alt market was all lifting together, everything was going up all simultaneously, then that's this kind of conversation, which is dangerous. You don't want to see everything all up, maximum buys, both medium and short term, everything all screaming up, because that is the classic signs of a top. So, I suppose with regard to crypto, we don't really have it. It would be kind of cool if we could get this built up. But right now you can actually see in the medium term, fairly bullish, but in the short term, kind of weak. We don't really want to see these both go like, 70, 80, 90%. And again, Sjord's actually, a big shout out to Sjord, just had a baby. So congratulations, Sjord, was able to successfully reproduce. But he has till January 1st to get this all reporting all nice and smoothly. So, we're going to be working away on crisping up this. I still don't exactly know what the components are in this crypto proxy, but this should be a good proxy for us to use going forward. And if anything, what I like to see, and I'm not quite sure why this is acting this way, but I'd like to see everything go deeply, deeply red here, which would actually mark a long-term cyclical bottom. Love to see that. That would be awesome. And frankly speaking, on the stock market, something is jumping out at me, and I know I'm going back to the stock market. Sorry, guys. But I don't know whether you noticed recently, but this silly little Russell 2000 versus the Dow, or basically growth, the value side of the equation versus the big conservative. Man, this thing is just charging higher. A big old key reversal there on Friday, so cool your jets. Don't anybody go buy that right there. But this is kind of trying to tell me a message that, hey, should get ready for, the junior market to do pretty well here. I don't know. I mean, we could be in one of these situations where you're kind of like, well, aren't we right back to where we were basically last winter, where before the COVID shit hit and all hell broke loose? Possibly, definitely. But I guess this kind of jumped out at me as maybe a longer-term cyclical pivot. Again, growth proxy. You can see 2008 financial crisis. You can see how they just got absolutely ripped, put in a bottom, and then worked their way higher. This was the bull market. So here we are, put in a bottom. Are we going to rip our way higher here, back up against these highs? Could be. Maybe a little too far, too fast. Could we come back down, clean this up a bit? Yeah, maybe too. But I guess what I'm trying to say here is I feel like if the stock market could go, remember, these Fed guys, they don't want to see the stock market break down here. Because then that means all hell's going to break loose in our society. So, and the politicians have said that expect a stimulus after the election. So, my hunch is the election comes, COVID, oh my God, then we're going to get the stimulus package. And then the question, at that point is, does that base us here? Maybe there's some little panic that takes us back down against these lows. I don't know. And then we start the move back up again, but on another big round of quantitative easing, right? Bitcoin loves that. Higher it goes. So don't be surprised, that the Fed comes out along with the U.S. government and says, well, we've gone and put another floor in the market. And, floor in the market, work your way higher. They actually came in through this period a little bit, bought like mortgage-backed security stuff, floor in the market. So don't be shocked, especially, we might even hear, now that the election event is done, Fed comes in with bazooka and just totally slams the market with liquidity to make damn sure this thing moves higher. That could possibly happen. So that's the weird, this we live in this funny fugazi world where value is kind of being thrown out the window right now, which is damn scary for an old timer like me. Because at some point there will be a day of reckoning. Anyway. Okay, so let's get on to the corn. Oh, God, man, talk too much. So back to this conversation. As I had sort of said, the guys that had the balls, they're the people that get paid in this business. So, the Cobains and the Kavarkanators and, I think Julian even stepped in and bought some Bitcoin. Anybody who had the balls. A great part about a guy like Seord is he's like, I don't want to time this thing. I'm just going in and just dollar cost averaging. Totally fine. Nothing wrong with that. But the sharpshooters, they all got paid here. Way to go. Brilliant trading. The problem is you look at price right now, and let's call a spade a spade. These are like, $3,000, $4,000. This is $13,000, right? We hit $14,000. Come on, guys. That's like 3x. So, you see what happened when we went, 3x and had to almost give it all right back. So you can't say Bitcoin hasn't had one hell of a rally. It's probably had a bigger percentage rally than probably most of the stock market. Also, too, and this is a bit more advanced, but what you see on the screen, Gartley, Shark, ABC, 3 drives, these are what are called harmonic patterns. And traders have just found over time that when markets come into these harmonic levels, it's often a level that maybe you should keep an eye out for a potential reversal. In fact, actually, that's what PRZ stands for, potential reversal zone. I thought it was funny. I guess somebody has coined PRZ because there was another site that had a whole big write-up on harmonics, and they called this a PRC. So, I don't know, PRZ, PRC, call it whatever you want. Point here is at these endpoints of these harmonics, the sharpshooter traders, they're looking for some sort of, all right, that was a big move, and now we're going to clean up a little bit. I did find it fascinating. You just don't see this every day, that we have 4 different harmonic patterns that all come to a fruition between about 13 and 15, 16,000 bucks. And you don't see that every day, folks. That in itself is worth taking a screenshot. In fact, I even said that I wanted to tweet this out just so I had it in the Twitter stream So a year or two from now, when we're going back and looking at shit over time, I can show you what happens when you have a big cluster of harmonic levels. And also too, this is extremely dangerous for the people that want to like pick tops, because you're going to be like, okay, is this the top? No, that's the top. No, that's the top. Kind of like our funny little crude oil example, and you end up, booking like 3 or 4 different losing trades trying to pick the top here. My advice is just let the damn top happen. And I got a sneaky suspicion that our top is probably going to look something like the way this top happened here, with just a big old honking shooting star. There is a gentleman, Stanley Druckenmiller, that I make reference to, that he famously came in and shorted the gold market in the 2016 election. On a very similar type trade. Not exactly the same, but very similar. Right here. So you can see the rolling top that's in place. This is a bear that's pretty well established. And then on the election event, you notice, that was right in here. Right, you notice that they just brought price right back into the original top. So, not the same scenario. But I definitely think that we could have a scenario like this shooting star kind of action on election night. That wouldn't surprise me at all. So, if we did get, and keep in mind, first and foremost, Bitcoin never finishes a move either up or down without some sort of horrendous face rip up or face rip down, right? Big face rip down, big face rip down, face rip up. These 2 candles here, right? That's 8,800, and we made it all the way up to 13 and change. So that's $5,000 in those 2 weeks. Bang, bang, done. This kind of move here, 2 weeks, right? And 2 candles. 11,000 to 20, so that's $10,000 in 2 candles. Bang, bang. So my hunch is whatever the hell this top is, it's gonna be one of these nutso insano candles. Just be prepared for it. And we might get a situation, especially like this shooting star example on this Mountain Man tag here from back in summer of 2019. You might get a candle that does something like woohoo and finishes like that. That wouldn't surprise me either. I mean, I don't know what the fuck this is going to look like. It's going to get pretty crazy, I'll tell you that much. Show me a new high and I'll show you a buy. So, I don't think it's a good idea for anybody to say, hey, this is a bear market. That's not a bear market. If anything, I hate to say it, you know what to me this looks like? This is a trading range. That's what this market looks like to me. And we are up in the top part of the trading range. So you all know reload zones, shorting against highs, candle body highs. I mean, you should look at this profile alone and say, well, if Bitcoin is such a fucking awesome buy here at 13,000, 14,000, where are the buyers? Does anybody notice that? All you people on YouTube video page over there. Do you see how there's very little buying interest in Bitcoin up here? I mean, what the fuck? We are down here too expensive. All right, not quite sure what that means. The point here is that if Bitcoin was such a fucking killer ass buy and it's next best thing since sliced bread, you would see buyers buying up here. But they're not. So that's got to be a little bit of a warning unto itself. Here's the problem though, right? Is, Brian's a slowpoke. I don't really, I'll tell you stuff that's sort of going to try and keep you out of trouble. Don't chase, don't chase, don't chase. Could, at 13,800, could Bitcoin rally a good, $3,000 from here over the next week? Sure. And could somebody look back for me 2 weeks from now and go, Brian, you're an idiot. I just left $3,000 on the table because I didn't buy when I thought I should buy? Yeah, you could. I mean, this is probably the absolute worst possible scenario, other than maybe coming in after an insane face rip like this. This is the worst possible scenario for an advisor to be advising. Almost the statistical odds of you actually telling somebody some information that they go at the end of it go, that was really good advice. Thank God I listened to you. It's only about 33%. I mean, very, very low odds. So I can tell you what I see on the price charts. That's what I see is we're coming into a level where I would expect some sort of top to develop through here. That's about all I can say right now. We have big unknown fundamental event windows. The biggest you will probably see in your life. There you go. Andre, should I buy or should I sell? You're probably not going to see, like I said, the next time this kind of shit happens is going to be 40 years from now. You're not going to see such a high anxiety, high intensity, fear scenario than what we have right now. Is it in my best interest to actually predict? I think this is going to happen. Not really. I mean, anything could happen here. Fucking you get up on stage. I can see fucking Donald Trump get up on stage and pull his mask off, and it turns out he was Hillary Clinton the whole fucking time. Joke's on you, America! I don't know. Anyway. So, in an image, that's what I think about the current Bitcoin market. I think probably what I should do now is just pop on over and see if there's any questions for the level 1ers here today. They are diligently working through their school program. Super impressed with them. Well, looks like we got a couple here, so let's see what we got here. Okay, so question number 1. A question about candlesticks. And the level 1ers just did their introduction to candlesticks module this past week. Learning about inside bars and outside bars and empires and fractals. I can see why candle body highs and lows are important for stocks on the weekly and daily chart, because it might be significant where the session closes. But with cryptocurrencies, we don't have sessions that close. It's just one endless trading session. Why are candle body highs and lows even important here? Well, it's interesting to note the actual time of day of the close. And that occurs through what we call the Asian kill zone. And think of that end of day event as almost kind of like it's an odd period, right? They actually call it like the institutional session. Most retail business, the Asians, they haven't really woken up yet. The Europeans, they're fast asleep, and the North Americans, they're out having dinner and they're sort of doing your thing. So the point here is that you get this funny lull through that window, and I often find actually that key marks are registered through that funny Asian kill zone window that, like I said, most of the sort of retail public are actually, they're gone. They're not participating in the market. You see some really funny price action around that Asian session as well. And I think it has a lot to do with the way that they sort of mark the end of the trading day in the Forex market. So I think that the end of day levels are actually pretty important in crypto too. But what you're also going to find too is that, if you look at like an hourly chart. In fact, actually, I had made reference on a Bitcoin chart here that I was publishing just recently about a 4-hour candle body close level. That was just an insane trade location. That was off of down here. This was the 4-hour candle body low level. I mean, if you had bought that there, you'd probably be feeling pretty good right now. So it's not necessarily, definitely daily, weekly, higher time frame, more confidence in the signals, right? So there was that 4-hour candle body low. I mean, fuck me, talk about a level. Jeez. So what I want you doing with the school program is thinking, all right, candle body lows. Think, all right, there's the reload zone. Hey, I've got 2 reasons to think trade location right now. Now, when I drill down to my lower time frame charts, do I have signs of divergence? Do I have W's? Do I have, New York or liquidity event windows? If I'm not mistaken, I think this happened right through a New York kill zone. I mean, what I found fascinating about this Bitcoin chart over the past week was that actually everything that happened here was stunningly cliche, and everything that we teach in the course material. And this is not a daily or a weekly candle body level. This happens to be a 4-hour candle body low level. So I don't know whether that helps answering that question. And then what I would also say too, is the person who asked this question, are you here? What are you guys saying over there? Depends what your time frames are. Trading, investing, just trying to accumulate as much as possible. Dollar cost averaging. Really no wrong answer. It's personal to you. All right. Faust is over there on YouTube. Looks like he's teaching a course. Awesome. Can I subscribe to your newsletter, sir? Please, please, please. Did I get an answer? Was the person who asked this question, are you here? Let's see. Yeah, me. Martin. All right. So what do you think, Martin? Does that kind of help you at all? Can you see how this 4-hour candle body level set up a pretty damn good trade right there? I mean, just insane trade, really. And it's not really off of the daily and weekly. And I will say with crypto, I've seen this, I've been following this fucking thing like tick after tick after tick for 5 years now. And I've noticed that through that Asian session, what's this? Can we shift artificially? I don't think I understand the question. Can we shift artificially? Can we shift artificially the closing hour on TradingView? So that it matches the New York closing hour. You can go in here and you can set what your clock is actually set to. See how it says UTC -8? So I happen to set it just for the West Coast of North America. I mean, really, isn't that interesting? Let's switch to Vancouver, obviously. I'm in Vancouver, not LA. Maybe, but point here is that answer what you're talking about? I'm not quite sure what I understand what you're saying there. So, okay. I'm getting the impression that Martin feels as though his question was answered. Oh yeah, somebody was sending me a whole bunch of stuff about Ledger. Be careful, anybody who uses the Ledger. From what I understand, there's a phishing campaign going on to try and get you to log into websites and give you your passwords and all that kind of stuff for your Ledger. So be careful there, everybody. I actually got a message from Johnny Salmon about that over the weekend. He was pretty upset about that as well. So thank you, Tommy, for posting that. And also, too, shout out to any of the Europeans that are having trouble listening to Brian's broken English. My apologies. I do know we have one gentleman who's struggling very diligently to keep up with Brian's language. For whatever it's worth, level 2, Kiran, of course, speaks Irish, so I don't know whether that helps or not. I don't even know. Is there? Can you speak Irish? But what I wanted to mention was that Murat is our German law enforcement professional. Man, he's a stand-up guy. He speaks German. So, maybe if you're from Switzerland, I know there's one person from Switzerland who's been having a very hard time with my language. My apologies. But maybe Marat can help you, and I even asked him to reach out to you and see if he can help a little bit in German. And by all means, message to TRI OGers. I've said this repeatedly. If you're an OGer on the site and you would like to take the course material and translate it into your native language, and you want the rights to market that in your native language and in your tongue, I'm totally down. Remember, all I want is I just want the information to get out there. I'm not here to soak you people and make a fortune off you or anything like that. But the most important thing is we got to get the information out. So if there's any TRIOGers that speak German, I can think of one gentleman living as an aristocrat over there, who used to be a woodworker here in Burnaby, BC. Can I please ask you just to translate all this crap into German so these people can learn without having to deal with Brian's crazy, silly Canadianese? And it would probably be worth your while. I mean, I'll definitely make it worth your while. Hey, there you go. Well, look at them. They already started. Well, you're Italian, though, aren't you, Andre? But you're Swiss. All right. Well, in fact, Martin, can you do me a favor? I won't specifically make reference, but maybe, Martin, if you can PM me, and I'll ask this gentleman whether he still wants to try and slog through this and see if I can get interpreters and stuff for him. So, all right. My apologies, went off tangent there, but remember, number one priority for Brian is I want this information to get out there. Please, all you YouTubers, right? Tell your friends. This is a free channel. You can sit and watch hour after hour after hour after hour. Put it on 2x speed, right? We're not here to bilk you for money. We're here to try and get the message out. Okay. So hopefully I got that question answered okay. All right. Next question. Hi, Brian. Hi. I'm a level 1 student. All right. Well, please please understand a concept of 5%. All right. Example of 10K portfolio. I'm allowed to put a maximum of $500 in one trade idea, 5%. Does it mean to put it at risk? Example, if a stock is worth $100 and a trade idea with a risk-reward ratio of 3 to 1, 100, 090. 130, 090. Am I allowed to buy 50 shares worth $5,000 with 3 to 1 ratio of example above? I still remain within the range. Could lose only $500 if the trade goes wrong. Is this correct? Yeah, on balance. I mean, the most important thing about Brian's 2 rules of investing is they need to be as simple as possible. They need to be universal. So rule number 1 is we want to work within a system. Some sort of, analog. Oh crap. Grim was going to talk to you guys and he just bailed. Damn. If somebody sees Grim come back into the call, can you just, should talk to him. Because I know he wanted to talk to you level 1ers. Okay, back to this question here. Sorry about that. So, rule number 1 is we got to work within a system. All right, 3 rules, whatever. Got to try and make sure that you vetted it. The system produces a nice, at least I would recommend 2 to 1. I know lots of professional traders that trade like 1.5 to 1 risk reward. And they just keep doing it day in, day out, right? I like level 1ers. Just get into the habit of at least a minimum of 2 to 1. Then that way, when you do risk your money and you get paid nicely. But as we explained in the risk module, there's many different ways to come at these rules. So, rule number 1, you got to work within a system. I don't care whether you get your signals from your dog's dog bowl, right? If it works more than 2 out of 3 times, And every time the dog goes woof or maybe farts once after he eats, that's a buy signal. Farts twice, that's a sell signal. If it works more than 2/3 of the time, I'm interested. So I don't really care what your system is. Just it has to be systematic and you have to follow it, log everything that you do, see whether you're actually following the system or whether you have behavioral issues. Are you taking appropriate risks on those system trades? So that is now speaking to rule number 2. Now, rule number 2 is just set up as, again, very cookie cutter, just nice and clean, financial planner, keep it simple, stupid. And the simple rule is do not risk more than 5% of any kind of stake that you're working with on any one single idea. It's just not worth it. I've seen too many people get hurt too much when they just say this one idea. I'll just risk a little bit more, and this one idea is gonna make me super rich. It'll be worth the risk, and it almost never is. So that's the financial planner talking to you. Keep it simple. Set ourselves up for success. Now, if you are a quote-unquote trader, are you going to, on a daily basis, risk 5% of your stake on a trade setup in the marketplace? No, not really. That's a really, really big number. The key here is you're never allowed to ever break that. And I would say even most traders will actually take like a fraction of that. They'll say, okay, I'll risk 2% on a trade setup. And that's even a bit aggressive. A lot of guys are like 1% risk, 2-to-1 risk reward. So if I'm right, I make 2% on my portfolio. If I'm wrong, I lose 1% on my portfolio. That's actually a nice simple way to approach investing. The point here is rule number 2 is 5%. You are never allowed to ever break that number. If you look down at your portfolio and you're like, oh shit, I'm more than 5% down on this one position and it's killing me. Oh my God. You have to man up, lady up, admit that you were wrong, get into capital preservation and don't fuck around. Because Nortel Network's a great example. Everybody loved that stock in 2001 at like $100 a share. And within 2 or 3 years later, it was zero, gone, poof, disappeared, worthless. So don't kid yourself. It happens. So, as we explain in the risk management module, and I think you probably should go back and watch that a few times. Remember we did the picture. I don't think I can draw here. But I just like to do the drawing. I know specifically we went through all this in the management, so I think you just got to go back and watch the lecture again. But the point here is that there are many different ways, right? 5% could be, let's say you got like 10 G's to work with, so we know that 10 G's, 5% is $500. So you could, little old lady, nanny nibble kind of strategy, just go and buy $500 worth of an asset and you're going to risk that to zero. That's a perfectly fine, especially when I was a full service broker and you have a huge book of clients and you don't really talk to people too much. You're just sort of like, oh, hey, Betty, how's the Canasta League going? Oh, yeah. Yeah, I've been talking with clients about this cute little Vancouver stock. It's a good structure. They got a half-decent business model, blah, 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 blah. And she says, okay, Brian, go pick up a little bit for my account. Well, how much can I pick up for her? What's maybe not in her best interest? And that's where this kind of strategy works out. So, for someone like that, I might have something like maybe a portfolio of 10 little stocks. Or, they could be cryptocurrencies. But remember, I'm probably not going to be getting little old ladies to invest in a shitcoin. I mean, that's probably not going to go over. But I could maybe like Ethereum proxy in the stock market or Litecoin proxy in the stock market. Hell, ETC, remember they had a stock market proxy. I mean, I think that story's kind of died, but that might be a good example where, they might have 10 positions. Each is initial investment of about $500. So that means that, times 10 means that she has about $5,000 in the market, in positions. And she's got $5,000 sitting in cash, ready to go if a new idea should happen to come along. A position of strength. Nice and flexible. We're going to sell halves on doubles. In this kind of position, if you had 10 positions on, let's say you're going to bat 60%, not even that great of odds. But let's say in this situation, 6 of the 10, we'll say she sells the whole damn thing on a double. So that's going to generate $6,000. And on the 4, we'll even say they go right off the board. So that generates 0. So in this really simple scenario, her ending balance is $11,000. She got $6,000 worth of stock, $5,000 in cash, and she's sitting on a 10% return on her money. I mean, this is incredibly simplistic. What I would suggest is you sell half on a double. And some of these positions, these winners, sometimes they can just go crazy. And I would also say in the stock market, if we're buying value, very rarely do our names actually go off the board. If you're going to buy high flyers and terrible, FA, well, sure. But a lot of the VCIM names and stuff we do, they just sit there and they don't do anything. But nonetheless, this is just a nice simple scenario of how you'd run like a very simple little old lady approach. Keep it simple, stupid. The next category of investor that we have is what's called Joe Sixpack. Now, Joe is going to say, let's see. You know what? I don't really want to go into a full lecture on the risk management module. I basically do exactly the same thing through that module, so I'd just be repeating myself. So the point here is Joe Sixpack, he's going to double his bet size. So he's going to bet 1,000, but Joe says, look, if the asset falls by 50%, then I'm going to walk away and I have to act. So remember, little old lady, she just goes and buys $500 worth of an asset and just risks to 0. I don't really care if it goes off the board, it goes off the board. So what? Joe doesn't take that approach. He says, look, if the asset falls by 50%, then basically I'm going to walk away. So obviously, Joe's going to be a little bit more active than a little old lady. But because Joe, of course, puts twice as much into the trade idea, he's going to get paid twice as much as the little old lady. But again, he's putting $1,000 into the trade, and he's going to walk if it loses less than half its value. So, same sort of thing. He's going to risk $500, exactly the same as the little old lady. Same risk. But here, if this thing falls in half, he's walking away. So Joe Sixpack, he's the typical retail broker. Remember, little old ladies, and it's kind of funny how some people in the past, they sort of really attach themselves to this little old lady concept. But keep in mind, most people that play the market, they're not little old ladies. Most people that play the markets are Joe Sixpacks. So ironically enough, the strategy that actually applies more to the public is really Joe Sixpack than little old lady. But, we try to explain that in the education program. Anyway, so, this is just two simple ways, the different ways that you can approach that 5% rule. And then remember, of course, these are people that are long equity. Oops. Remember that we can apply all these same principles to things like futures contracts. Right? You crazy OK coin traders trading your forwards. Just remember, the margin requirement for a forward, it might be a big chunk of this 10 grand. Where's our 10 grand? There it is up there. 10 grand. Right? Just to strap on a Bitcoin futures contract, the margin might be like, $5,000. Well, what are you supposed to do? In this case, right, this is just the margin. So in this case, yeah, I'm going to have to put a big chunk of my stake up just for the margin. But in this case, because it's a leveraged product, you have to figure out what 1 point is equal to in real dollar terms. And I can't tell you what contract you're trading, what the terms of the contract are. But you have to figure out what 1 point movement in your forward contract is. And then it's the same rule. Now, like I said, I wouldn't use 5%. These guys here, they usually stick somewhere between about 1% and 2% risk on their stake on any one single setup. So if you were working with 10 Gs and you said, I'm going to take a 1% risk on any setup, how much money are you going to risk on any one setup? Anyone? No one? Yeah, $100. So you're going to have to figure out what 1 point movement is in your futures contract. Divide that by $100, and if you move that many points, then you better get the fuck out of there. So, very different risk takers in the marketplace. And then, of course, if you want to go even crazier, then we can go into the derivatives and the warrants and options traders. But for your purposes, I think that's basically, this is how we outline the course material. Colleen Sanger, I think he may be asking about what the 5% risk is in a 3-to-1 risk-reward scenario. Okay. Thank you, Colleen. So, this would be sort of like this scenario. Let's take this scenario and we'll say we're going to forwards or futures trade Bitcoin. And we're going to, for the purposes of this trading plan, we're going to take 2% risk on our portfolio. So if we're working with 10 Gs, then our trading plan says 2% risk. So who can tell me, of the 10 Gs, how much money are we risking? Really simple, nice and quick. Boom, boom, boom. Quick, quick, quick. Boom, boom, boom. Boom, boom, boom. Boom, boom, boom. Boom, 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 boom. Nobody. Nobody? Oh, man. $200. Thank you, Colleen. So let's pop on back over to our Bitcoin chart. And you can see we got this cute little bot working here. So you can see if I'm going to buy the corn. I'm going to buy that bot level right there, and I'm going to risk down to there. And if I'm right, 3-to-1 risk rewards, I'm going to get paid on a nice foggy tag. Ding, 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 ding. So there's your 3-to-1. Remember, we're going to risk $200 of your capital on this trade. So you're going to have to go and figure out whatever your futures contract is. What the leverage is, what the margin is, what does 1 point equal. Let's say in this case 1 point is equal to, I don't know, $10? Make it nice and simple. So if 1 point movement is equal to $10, we are saying we're going to buy at $13.78 and we're going to risk down to, what the hell does that say? $13,544. So that means we're going to risk 200 and what's that number? 34, right? Something like that. 234. So that's the raw dollar risk on the trade. Remember, we said we could risk $200 on this trade, right? So this is a little bit more than that $200. And actually, let's just for the purpose of this, don't worry too much about this. If you want to go and figure out what the forwards leverage is and what point is, that'll increase your accuracy on this statement. But just for the purposes of this, let's assume that just it's a 1-to-1. Okay, so $234. We said we were going to risk $200 on this trade, right? So what that really means is we're going to risk $200, 1% of our stake. That's what this window is, there to there. And if we're right, we're going to get paid this window, which is, who can answer that question? 3-to-1 risk reward, quick like a bunny, nice and simple. Let's see if anybody's listening. Thank you, Colleen. I think you're the only one listening. Oh, and Ming. Beg your pardon, Min. Means if you're right, you're going to get paid $600. 3-to-1. Wrong versus right. That's what we're talking about here. Relative to your portfolio size, the risk per trade, and if you're right, because keep in mind you have like a finite risk window, but if you're right, what is that relative payout? 2-to-1, 3-to-1, whatever. All right, so there's the question. So Ralph actually got to my next point here. So if we have $10,000 to work with, we're going to raise $200 a trade. Let's see if YouTube can clue in, because obviously the Google Hangout, they already have the answer. Can this person actually buy one full Bitcoin right now? Right on, DG. Tell a friend. Woohoo! If I buy one full Bitcoin here and my maximum risk on trade's $200, am I breaking that rule if I risk $234 on this trade? Anyone? YouTubers? Boo hoo hoo. 007. Hey, your buddy 007 just passed away there over the weekend, eh? Poor guy. I think he lived a pretty good life, though. If we can all get 90 years, I think none of us have got anything to complain about. So, whoever asked this question, here would be an example where you would have to take this 234 and divide it by that 200. And it probably gives you, I think somebody in the lounge said, you can buy 0.85 of a BTC. Hopefully that helps you understand. In this case, if I want to risk 200, I can't buy a full Bitcoin because the risk is 234 on this setup. So that means I got to take a fraction of the trade, which is fine. I mean, it's perfectly fine in this kind of scenario. The bitch is when you're trading these big futures contracts that, like one contract's 5,000 bushels of corn. Makes it awfully difficult to break these damn contracts up. But that's hopefully, what do you think, Colleen? Does that kind of speak to what you think that person was asking about? Colleen kind of thought maybe I didn't actually. I'm not sure. Well, I don't know. Is the person who asked the question, are you here? Maybe we should ask them. Where are you? I know you're in level 1. You're totally awesome, but I hope I helped answer that. Am I allowed to buy 50 shares worth $500 with 3-to-1 risk reward or bench? Oh, yeah, that seems okay. Still remain within the range. Could lose only $500. Yep, if the trade goes wrong. I mean, basically that's right. That would be like sort of your little old lady. I'm only going to buy this asset, and that's the maximum risk, right? Remember, you could go and margin trade this, right? big leverage. Just make damn sure. And remember, that 5% rule is absolute maximum. Do never break that number. I would almost prefer that you actually go and rewrite this and say, I'm only going to take half of this 5% risk. So that way, I'm going to plan to risk 2.5% of my portfolio on any one trade. But if everything goes absolutely horribly wrong, I still never break that 5% rule. If you're just going to buy something and then risk it to zero, okay, that's fine. I mean, you don't really have to stress too much. But like if you're doing like a futures trade or something, I remember one trade I did in crude, I had I think it was a 3 lot on or something, and I got filled 6 cents away from my order. So on a 3 lot on 6 cents, that was $180 more loss that I had to bite because just, hey, that's trading for you. Terrible fills. So that's why, if you're futures trading, leverage kind of trading, it's probably better to take that 5% number and cut it in half. And then that way, if you get an absolutely horrible fill, then at least you still don't break that 5% rule. Okay, sure hope that helped. If not, we can always take another whack at it later on. Not too many questions today, pretty light. Grim's not here though, is he? Because I remember he said he... you guys in level 1, actually, I think you got a pretty good presentation on Grim's setup process. So by all means, if you have any further questions with regard to his presentation today for you guys, maybe pop it in here and we can revisit it next week. Okay, so that's about that. As you can see from the screen, I'm actually thinking Bitcoin wants to work its way higher here. Of course, we have this monstrous, ridiculous political event coming up here, and I wouldn't be surprised if there's like a Druckenmiller short trade setting up here on a lot of these assets as they face rip up into this political event. I do find it interesting that we're just sort of hovering right along the Gann angle here and sort of trapped in the teal box for the time being. Last week when I did these videos, I kind of suggested I thought that we were in this hold on a second. We were in this box, and could this was a 4-to-1 angle off the top. Could it be busted through? Would it act as resistance? That was when we were sort of in here. We busted through, and interesting how we just kept running into this angle up top here, which kind of led me to believe that we're sort of trapped in teal land. As we come into this election event, I actually threw on, whenever you see a whole bunch of lows like this all being respected, you can actually start throwing on one of these sort of parabolic curve studies and just sort of start playing connect the dots. And it, when you see this kind of basing action where the market repeatedly keeps slamming down into levels and keeps making higher and higher and higher and higher lows, it's telling you it's getting ready to fucking do some crazy ass shit here. So I just threw on the parabolic curve, and it's fascinating how we're just sitting right on that curve right now. You see that? So, I mean, I don't know what the hell's going to happen. Nobody can predict the future. I would say that botters, you can actually see there's a hell of a war that went on right at this bot level. So lower time frame players, they're getting a signal to take a shot here. And this parabolic curve, if we follow along, it should take us up into 1.618. There's a Feigenbaum level. There's the ABCD extension level. And the top of the parking garage is all the way up here. And we have 2 foggy levels sitting right up here. Because there's 2 here off of this base that was carved out, I can't see why that can't be hit. It's almost like the market just keeps affirming, hey, I want to be here. Fuck you. I want to be here. So we'll see what happens. Only time will tell. The only problem that I have with this is, and that's getting back to... actually, I wanted to talk to you guys, level 2ers. Marat did just such an awesome job on Gann on Friday, didn't he? Oh, he's so cool. I actually put the presentation. I put it in the library. It was so good. I think it should just become a TRI resource. So do yourself a favor, check this out. But Marat, I don't know whether you noticed this. This is kind of a fun study. This is a dovetail to his presentation. I saw Marat get to this really close. He came a couple times, then he kept backing away. So I wanted to mention this before I finish this video here today for you, Chief. But one handy little tool you can use with Gann, and this is what he calls squaring price and time, is you actually look for key pivots within a bull or bear, and you can see red, obviously, bear, bull, green. And on key pivots, like this one, for example, you notice that the W comes down, the market pivots off this level here. And so Gann actually said you can take a 45-degree angle off of these pivots and draw the 45-degree angle off of the 0 line. And then what mysteriously happens, it's freaky. I mean, do a study like this, it's quite remarkable. But in essence, the market will continue whatever that trend is until price actually comes back and tags that 45-degree angle. So it's such a great example here. You can see market pivoted off the lows. There's the pivot bottom. Market is a bull until it trades back to the 45-degree angle. Doink, done. Market breaks. Take whatever market structure signal follows the break. In this case, you can see market put in a W following the end of this move. In essence, this point right here actually marks where price and time officially square. So at this point, like I said, this move is done. Price and time have officially squared. So take your next structural signal, in this case a bullish W, draw a 45-degree line off of the second low, and boom. Notice this is a bull until price and time square. And you can just keep doing this over and over. So this one, obviously the bull's done. First market structure signal, there's a big M. Market's a bear until price and time square. Isn't that cool? So it's fucking awesome, eh? So price and time square, what's the next structural signal? W comes in here. Price will be a bull until price and time square. Price and time square, doink. Now the next signal. First market structure signal, M comes in here. Draw your 45-degree line. Trend will be down until price and time square. Doink, done. Isn't that cool? So I did that study up for you, Marat. If you'd like a screenshot of that, I'd be more than happy to share it. Any level tours, another awesome added feature. And so, and now everybody's sort of like, okay, well, what the fuck's going on right now? What's going on? What's going on? So you notice here we went into a bear, market structure failure, price and time squared. Okay, what do we do now? Put in a bull. All right, bull till price and time square. Okay, what do we do now? Bull. All right, we're a bull till price and time square. All right, what do we do? You can see the latest signal came in bull. And believe it or not, here's our 45-degree angle. So now from this perspective, you can see this market has a hell of a lot of wiggle room in it to remain a bull. Isn't that cool? So, you know, all the moon boys and all the people are like, oh, yeah, Bitcoin $10 million and all that shit, right? This is music to their ears. But I thought that was such a super, super cool application of Gann and of the 45-degree angle, and how you can let the 45-degree angle tell you when a trend is done. So cool. Anyway, I don't know. Do you guys want me to share that? I'll throw it in the lounge just in case anybody wants it. Boom. All right, we're getting about 12:30 here. I got to get my act together, get all pretty for the boy. You gotta do it for the boy. You know, I will say, I think it's so important, everybody. In these very uncertain times, let's just try and remember what value is. I'm not telling you market's top, market bottom. I mean, I don't know what the hell the goddamn market's going to do. You probably know as well as I do. Just go find one of those social media influencers. They'll probably tell you what the hell the market's going to do. But I really like the idea. If you can find fundamental analysis and technical analysis that happens to correspond, that's the sort of, that is the definition of rational analysis. Terrible thing to say. My apologies in advance. I don't think Bitcoin is trading at value right now. It's just Brian's opinion. That's all. Nothing more, nothing less. I couldn't come in here on the buy side and buy Bitcoin right now. I can't. Sorry. Having said that, we did have a lot of plans that forced us to buy at the bottom ends of ranges. Also, too, our Shane and Andrew and I, we're actually accumulating Bitcoin right now to build our put strategy for probably the new year. So that's mentally where I am. I don't know where the top is. Nobody does. Don't get into the business of predicting. It's just not worth it. But when I look at a whole bunch of FA events that are all staring us in the face, and I see a bunch of technical, just sort of indications that I got to cool my jets, that maybe now's not the best time for me to go and risk. I mean, doesn't mean you can't be a Bitcoin enthusiast and fuck fiat, right? But does that necessarily mean that buying Bitcoin here translates into a capital gain? I don't think that that's the case. But, so what? That's just Brian's opinion. Here's Gog. Gog just crashed the site, and he's like, "How do I get into the live the feed? How the fuck do I get in there? I want to bug him." That's adorable, Gog. I don't know whether you're watching right now. I'm gonna wind this up here, Gog. I've been blabbing for a couple hours, so you're around the site. You'll get used to how this place operates. And actually, I see you're in the level 1 program. That's kind of weird. It's the same way that you join the classes with Grim. So, okay, I'm gonna leave the rants at that. Should be a very interesting election. Because SP, all right, so SP 500 says, then why are you buying BTC? Can you explain the put strategy a little? Maybe let's plan to do that after the election, because I certainly don't want to buy any puts now. I want to see a nice big fat blow off top come in. And the reason why they're just simply put SP 500 is that on Deribit you have to buy the options in the silly cryptocurrency. So would I prefer to just simply sit in cash and just pull the trigger when I want to? Yeah, but you got to have Bitcoin to buy these goddamn options. So I don't want to go and buy it all right away. So our plan is we're just going to go break the strategy into eighths and just nibble away here just so we have a Bitcoin position to actually go buy the damn put options. It's a pain in the butt, but oh well, it is what it is. And we just got that started, so I'm not really in a big hurry to do that anyway. I did, I think back in the summer, back in here, I went and bought a September put just to cover my ass in case things fell apart. That option expired worthless, so it wasn't even part of the equation right now. So right now, Shane, Andrew, and I, we don't have any Bitcoin on the books. We're just sitting in cash. We have a couple free Ethereum puts just clunking around the account. And interesting, when we sold half of the Ethereum position on a double to get that cash back, they actually paid us in Ethereums, right? So technically we still have some Ethereum sitting on the books there to go and repurchase those Ethereum puts, but I don't really want to do that right away either. So let's see how this election goes. I get the feeling we're going to have one of these kind of nutso candles coming up here, folks. Get ready for it. It's going to be pretty wild. And I mean, what the hell? If you're sharp and you're a lower time frame trader, there might be a good $1,000 to clip out of this market right here. But I'll tell you, that ain't going to be an easy trade. And it's probably not going to be a trade most of our sort of beginner traders even could contemplate. But it's going to be a pretty wild few days here ahead of us. And if anything, it should make a really lively BCS for this coming week. So, okay, I'm going to try and stop talking now. I know it's awfully difficult, but here we go. The only thing left for Brian to say at this point is a big bye. Oh, wish me luck with Liam. Thank you in advance. Bye.